morning, everyone. This is Leslie Jouflas with Trading Live Online, and welcome to this segment of your Daily Five. Thank you, StockCharts, for inviting me back. This is always a fun segment to do. We have about 10 minutes to present about five charts. If you'd like to email me any questions or comments, here's my email below, and here's my website here. So I thought today we would take a look at this current bounce in the energy markets that we're seeing. I think this is a short-term bounce. We're going to start out today looking at the crude oil futures chart and then move down, and we're going to look at a symbol OIH, symbol CVX, SLB, and HAL today. So let's get right to the charts. All right, so this is the crude oil futures market. And so what I'm showing you here is these blue lines are just representing some of the previous support and resistance areas. So for instance, back in April of 2020, where this uptrend began, there was some resistance right around the 40 level. The 40 level back in, let's see, way back was a big price level for the market to get through, and it stayed around there for quite some time before it was able to get above $40 a barrel. And so as the market rallied, it came back to that 40 level. The market, these price levels have memory to them. It hovered around there for a few months and then continued this uptrend. So each one that's marked off is just showing an area. Let me go the other way. An area that again was either, previous resistance, which now may be support, and the other way around. So the last one was here around this 82, 83, 84 level. The market has not declined to that level yet. It's just really in a large range. So since it made the highs back in March of 2022, very sharp decline to the downside, another sharp move to the upside, sharp to the downside. Sometimes that's a clue that the market is going to be going into a range. It gets a lot of volatility in both directions and then eventually sort of settles down before it's ready for its next large move. So I've marked in, let me kind of, I'm going to open this up a little bit more. This retracement, we can see that here's the 382 retracement. This is from using the 2020 lows, and the market has not gotten there yet. Here's the 0.50, 0.618, and lower. But this retracement from this high to low to here is a 786 retracement. That was around the 120, just above 123 a barrel. So I think this is going to be an important high area of resistance, that if the market were to make more highs, which we kind of don't want them to because we're starting to see some gas prices start to come back down, which is nice. But this is a level that the market has to take out. And conversely, this is the important support level around the 90 to 92 level. There was a previous little gap area right here at the yellow circle, and you can see where a lot of these open and closes are right in that area. And the market, again, has just been doing a lot of testing up and down and around through that. Now here's another little gap to the downside here. Now I've drawn in, if the market's able to rally above here, this is an ABCD sell pattern. If you'd like to learn more about these, you'll find some introductory courses on my website. If you have any questions about it, just feel free to ask me. But the RSI here is still in a bearish mode. And if we break these lows, we see the price below these lows, and be starting to look for where some of these areas are marked in as potential support, and then monitor the market around those areas. We may see a big ABCD buy pattern, but this is a very long sort of sideways movement, so I would be cautious about that. because of this, because we have an overall large ranging coiling setup. And then this, where this A, B, C, the D is right here, that's just coming out of a breakout to the downside area. But some of the extensions might be better places to look for potential buying opportunity. But again, I think short term, this is just a short term bounce to the upside, and we're going to watch the resistance and the support. So now let's move on to, let's take a look at OIH symbol. So on the weekly chart, we can see that this market has been in a very long-term downtrend with some, rallies, corrections to the upside. And there's the April 2020 lows, and it followed along. OIH, this actually is made up of 25 largest U.S. oil service companies. So I thought it'd be interesting to include this one today. Uh, these highs here, of course, this is the resistance area. If the market is to move higher, it's got to get above this 320-ish level here. But it doesn't look like, to me in my analysis, that it's ready for any type of a rally yet to the upside to take these out. I think we're just seeing, again, a short-term rally from these lows to highs. And the RSI right now is confirming that. You see the divergences here. So if we get this rally to the upside, RSI turns up a bit more, does not exceed these high levels, but turns back down and takes out that low, then that's going to most likely be telling us lower prices to come. So I want to take a quick look at the retracement level from the April 2020 lows. We can see that it's found some support at the halfway mark of the 0.50, but it's also finding resistance at that previous 382 level. So it's sort of in between a rock and a hard place right now. If it does rally above this level, I think it's just going to find more resistance in this area here. That's around the 255 to 260 level, and then up here, if it were to find the strength to get up here, 280 level should be big resistance there. The next level of support I would be watching for is down around the 618, 169, 170 area, and that might be form some patterns for a tradable bounce to the upside. So looking at the weekly chart of Chevron CVX, this has a different picture than OIH on the weekly chart. This has been in an uptrend. It went into a sideways move here, breakout. That's from 2017. This is back here from 2014. And this move to the downside now has found support at the 382 retracement and also at these previous highs. But looking at this chart, you can see the very long gap up here, long wide-ranging bar to the downside, the support. So again, I think this might be going into a possible range here. If this support level breaks, that would be looking down to the 0.50 level, possibly the 0.618 level. The RSI is just starting to correct back to the upside. At this level right in here for resistance, again, 155-ish level. A lot of times the center point of a very long candle like this is resistance. So I think, around the 160 level too would be resistance. It may form, if it does not break these lows, it may form on any pullback, a little bit of a buying opportunity, and then possibly play that for a bounce back to the upside. But again, I think the upside is limited in these markets for now. We just looked at Chevron CVX. Now this is Halliburton on the weekly chart. So we can see now Halliburton was in the downtrend. Remember, Chevron had the uptrend. And notice how the retracement from this low to high, how this broke the 382, where Chevron was actually holding that as support. So between these two, Chevron appears to be the stronger. of the two for several different reasons, but sometimes you can kind of judge a little bit of relative strength by using Fibonacci levels in that way. So this is just showing us the retracement high to low here and back up. It just kind of exceeded the 0.50. You can see this previous gap area here, how that held as the resistance level and now retracing down. So same thing with Halliburton. I think any retracement back to the upside, maybe a shorting opportunity, and I think it might be a while before we see a really good buying opportunity. But Halliburton, compared to CVX, has not gotten, much of a rally to the upside. So I think more weakness to come in Halliburton. So very similar and symbol SLB, Schlumberger, taking the retracement here from the highs back from 2014 down to the 2020 lows, not able to quite reach the 382, came close to it, but did not quite get there. You can see the resistance area right here. And so this is the level that Schlumberger needs to get through in order to get more of a move to the upside. Now, we looked at the retracement levels from the 2020 low to high. We looked at those on Chevron and Schlumberger, and we can see that, or excuse me, on Halliburton, but we can see that Schlumberger is actually the one that got a deeper retracement so far. This one's gone to the 0.50, where the others, Chevron was found good support at the 382. Halliburton a little bit weaker, and Schlumberger a little bit weaker still. Again, any rally to the upside, I think, is just going to be met with resistance. So you see all this clustering area back here. We can see, right around the halfway mark of this long candle, right around the 40, 41 level. If it were to rally that high, I think it will find resistance and possibly be, a more of a shorting opportunity until these make some solid buy patterns, which I don't see yet. Again, the RSI is still on the weak side, that I don't think these are ready for quite a longer term rally yet. But I'll be keeping an eye on these charts and be happy to update them on our future segments of your Daily 5. So that is what I have for you today. I hope you enjoyed the video. If you like it, please give it a thumbs up and feel free to leave a comment. I do check those and be happy to answer questions there as well. So have a great day, everybody. Once again, this is Leslie Jouflas with Trading Live Online.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.